Larry, core CPI next week comes in ahead of expectations. What's the market reaction?
I think there's a pullback, and I think it creates volatility. What happens is the market's gotten a little bit complacent with inflation. There's been a lot of calls for Fed rate cuts, but inflation's still above the Fed target. So inflation's above the Fed target. The jobs market's very strong. The Fed has no reason to cut rates yet, and I think the caution point that we need to be aware of is if the CPI comes in as forecast on your chart, I think it really takes out the chances of a September Fed rate cut, and then it creates some volatility in the market. So I would expect a pullback in the S&P 500 if CPI comes in as forecast.
Larry, let me get over to you because you're our technical guy here on this roundtable. Any signs of exhaustion you're seeing in the stocks that have led this advance?
Not really at all. We've got strong breakouts across the board. It's not just technology, it's industrials, it's financials, it's the nuclear sector. So the weekly trends on the S&P and the NASDAQ are very, very strong. Some of the stocks, JPMorgan, the banks, Goldman Sachs, they got a little bit extended. Some of the cybersecurity stocks like CrowdStrike are correcting right now. But after these really big moves, we should expect to see some healthy consolidation, but nothing that I see changing the longer term trend.
Larry, I mentioned at the top of the show tariff fatigue. Why do you think stocks are shrugging off tariff headlines?
I think what stocks are seeing is that there's flexibility coming from the White House. Even though there's uncertainty, the White House has shown that there is some flexibility as far as what the tariff rates are going to be and that there can be some negotiation. So I think the markets have done a very good job of adjusting to the uncertainty.
Larry, let me get over to you here. The stock has underperformed in July. Any concern or red flag on your part there ahead of earnings?
No, that's part of the rotation that I discussed that started on July 1st. The chart that you just put up showed a sharp pullback in Netflix on July 1st. And we saw that with quite a few of the high momentum stocks, and money moved into small caps, healthcare, home builders. And I think it's a normal sector rotation. Fund managers have made a lot of money this year in tech and some of these growth stocks. And I think it's a normal rotation to book some gains and then reallocate into underperformers. Netflix is a very strong long-term uptrend. It could always consolidate after nearly a 50% move off the lows, but the long-term trend is very strong.
Yeah, Larry, that's what I'm trying to get at. Is the stock become so priced for perfection, even if Netflix comes out, again beats on earnings, maybe the street is just continued to incline to sell this name?
That's possible. Yeah. There's a lot of gains in a stock like Netflix that could be booked. So as a trend follower, I'm going to stay with the weekly trend, which is strong. But a lot of these stocks have had big run-ups. So if there was some profit taking into earnings or after earnings, as long as they stay over the 50-day moving average, it really wouldn't concern me.
Welcome to Blue Chip Daily, one of the industry's premier sources for high-level daily technical and trend analysis. Blue Chip Daily is ideal for both investors and traders of all time frames who want to be on the right side of major market moves and trends. We focus on over 750 large cap stocks, all major stock indices, over 70 exchange-traded funds, bonds, oil, gold, and Bitcoin. Sign up now for Blue Chip Daily, and you will get access to real-time portfolio alerts, premium Twitter page with intraday alerts and commentary, the chart of the day with best idea, daily video and report, and much more at www.bluechipdaily.com. Subscribe to the Blue Chip Daily YouTube channel for more technical and trend analysis videos and other content.